And welcome to Chart of the Day Cafe for Thursday, May 5th, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So as always, we start our videos off with a look at the Russell Index. We want to get an overall lay of the land before we tuck into any individual charts. And for that, we're using the IWM, which is the ETF that represents the Russell 2000 on a 5-year monthly time frame. So we're looking big picture. We're paying particular attention to the blue channel that the Russell traded within the confines of through all of 2014. And here's where we are right here, right now for this day in May. So the candle for the month of March, bullish candle that pushed price back into the channel. April, a little more indecision coming in with a wick at the top and a wick at the bottom. And here's where we are for the month of May. But we're sitting at an area of support on the daily chart. So I just wanted you to get that reference on the monthly. So let me pull it back to the daily. And you can see that this area is an area of support where price sort of consolidated a little while back. And here's where we are right here, right now. Filming this at about 9:15 on Thursday morning, the futures are trading in the green, so it looks like we might get some support here, but we're always looking for that follow through. Having said that, price has been persistent. This is the daily. Let me show it to you on the weekly. You can see that price on the weekly chart of the Russell is trading up and over that 8-day EMA, and here's where we are right here, right now. So with price up and over the 8-day on the weekly, I will be putting a chart forward to viewers this morning. And that chart is from the retail sector, and it is Foot Locker, sitting at this area of support. Before I tuck into the chart, let me tell you a little bit more about this company. I think a lot of people are familiar with Foot Locker. It's a global retailer of athletic footwear and apparel, incorporated in 1989. Currently trading at $61.85, but worth $93.30, so nice high value score, which is what we look for at Chart of the Day Cafe. It's got a forecasted earnings growth rate of 13%, a PE of 13.84. It's in an industry that is ticking higher, and it pays a dividend. It's got a dividend yield of 1.78%, so love that. So let's talk about the chart. Again, we're looking at the 2-year weekly. I can see this area of support here. And we're trading in a little bit of a wedge. So with price continuing to tick higher on the markets in general, I think this is a little bit of a heads-up situation where Foot Locker may have a breakout of this wedge and may move higher. I'm never making any recommendations whatsoever. It's just for your own further research, homework, and watch list. But I think this is one to really keep an eye on. Consider that yesterday was a soft day in the markets overall, and Foot Locker had a pretty strong showing, so that's always a good sign as well. So I'm going to put my little green circle on the chart and say Foot Locker might be one to keep an eye on in this area here. In preparation for these videos, you know I always like to do a little more research for you. This is a Barron's #1 pick for 2016. They call it Big Growth at a Discount, so I will include this article with today's video. Also wanted to mention Tesla announced earnings last night, and they were positive. Tesla's trading higher this morning, and so it may have an influence on GM, which has much better scores and pays a dividend. It's also a past Chart of the Day Cafe pick, so I would be keeping an eye on GM in here as well, for some pickup and perhaps a move up and out of this range. So with that, I will leave you. Have a great day, and we'll put another video out next Tuesday. Thanks.